Hello, today I'm going to look at two uh, indexes. According to the news that I'm seeing here, we have one news, it was for yesterday. Uh, DXY, the dollar index, it is saying that uh, here we can see the details that the US dollar index moved lower last week, capping its first weekly lows since late January. So let's take a look at the chart to see, okay, what is concerning about this index. It's going to show the power of United States dollars, of course, as it is is index, not surprisingly. So as I start with very clean chart because I'm going to analyze these indexes via technical analysis by price action method. And in this method, I'm not using indicators around the chart. I'm just focusing on the price because it's a price action method. And by looking at the price itself, I'm going to analyze utilizing technical analysis rules, of course, and tools. Start from the weekly. As always, it is not really mandatory to zoom out a lot because just looking at the very long ago, 2015, it is not going to help you that much. What is the current situation in the market? But always having some history in mind will help. I can see the last two waves. I can see that we had some impulsive wave with some sort of correction. So the first thing first is to utilizing these Fibonacci retracement tool. Let me just draw it more accurately here. I'm seeing that, yeah, it seems that it was an impulsive wave. I'm not going to count that impulsive wave, but some sort of correction to the 50 percentage. So this is really nice that it is reacting to those levels. I'm also seeing that it is reaching the previous level, uh, 38.2 percentage, and it is somehow a tiny reversal here. I will come back to that when I jumped into the lower time frames. But I think that that's a good information just to have, as I said, a good background of the history of this price. This is not price, of course, this is index, but doesn't matter what it is. The information I would like to take away from weekly is that to recognizing this level, which we know it is the uh, Fibonacci, the Fibonacci level. Let's draw it more accurately. And what I'm saying is that, yeah, we have some sort of a support zone here. That price just reached out, and we know it was a correction and bounced up. So this support zone, it is actually playing a really great role here for us. That's enough. Maybe another thing that I'm looking at the moment is the when this price actually we had another Fibonacci level on top. I've removed that Fibonacci level because I don't want to mess up my chart with a lot of things. So I can see another zone here as support zone, sorry, resistance zone. I can see price reacted here, also here, and we had a breakout, and this breakout, according to polarity principle, you know that when a resistance zone or support zone just get broken, it is not losing its validity, it is just changing its behavior according to polarity principle. And it is now going to be a same amount of importancy, but now as support. And as you can see, price after this breakout reached the same level, but now this time this zone or level, it is playing a role of support. Here we can see another time this is went up, and here we had again a tiny roll. This here we had a breakout. Again, it broke that level, but still it is valid. It is not saying that okay, we don't care about this zone anymore, because still it is reacting. Now again came back to its initial role, which was a resistance, and now it is again a resistance. Just several weeks ago, it reached out to the support zone. We had it here, and it bounced up. And again, it seems that we have some sort of reaction here. And as you can see, just by recognizing this very important resistance zone or critical zone, depending to the situation, if the price is upper than zone, it will be a support. If it is lower, which is the case at the moment, the price is lower than this zone, so it is going to be a very important resistance zone. And I guess it is enough for actually taking away from this weekly. Let's jump into daily. Let me just zoom out a little bit. Here, what I'm saying, that I know that we had just some sort of, let's just use a call out tool here. I can say that it was end of the corrective structure on 50 percentage Fibonacci grid recent. So we know that it was, I guess I have a typo on which recent, doesn't matter. But here I'm seeing that just for as my recap, that this was the end. So I have a better overview of the waves here. I would like to utilize this. I know that it was an ABC, it was a correction, and it seems that it has been ended. The reason that I'm saying, well, again, it's the first thing first, the Fibonacci level, that the price reacted and bounced up. We had a breakout here as well. If I draw a valid trend line, you can see that at first I actually draw it as such, but it is really important to know when you're drawing thing, it is okay. Now I'm happy, but because this is also reacting to this level, because trend lines are also support and resistance zones, but not horizontally with angles. I'm also saying that I can use these same arrows that I used to use as resistance here as well. It is almost reached that place, but be aware, just drawing a thread line, something like this, I don't call this really a valid thread line, because I have lost two or three important, depending to what you're seeing exactly, two or three important lower highs in between, and it's a very huge gap. Let's get rid of these arrows. It's a very huge gap here. This is not a valid trend line. It is always new developers. I can see that they are struggling with these. That what is the actual trend line? I'm feeling this as a more valid trend line. Still, yeah, there is a tiny gap here, but we know that these zones are not exactly 1 point. It is not exactly that price. It is a zone. That's why I'm utilizing this wider tool to actually showing this rectangle, is showing a, an area. That's why I call it zone, not an exact price. I'm seeing also people use this horizontal line, but I'm not a fan of it to showing resistance or support zone. It might work, but it is not that much uh, fun for me to use them, because I know these are not an exact price. Anyhow, I have a just returning back to our main discussion. We were talking about this correction. Why I'm saying that it is the end of it. What I wrote something like that because I saw that it reacted to a very important support zone, which was the 50 percentage Fibonacci. Also, I'm seeing a breakout here, which is really important. This is the second uh, actually indication. I can bring up MACD. I'm not using any indicators usually. Not the only one that I'm interested is MACD, just confirming the end of trends. Sometimes it is showing me what already have done. What is this MACD? As you can see, price is creating lower lows here. But if you just look at the same exact point on MACD, you can see it has been created higher lows, just vice versa. We have lower low, but we have a higher low, higher low. And if it comes even lower, we have a completely vice versa situation. We have again a higher high here. And this is what we call divergence. And here we have a very strong one. Let me just write it here. A strong divergence. This is my third indication that yes, this was the end of this trend. I had divergence. It was a correction. It reached out to the level, also a support zone. I'm saying if I want to be more accurate, I'm seeing some sort of a double bottom, not so clear. Maybe if we jump into the hourly uh, chart, hourly view, we probably will see these bottoms better. This can be a third indication. And the breakout, divergence, the support zone, the Fibonacci level, double bottom, we already have five indications. So all of them combine to each other. I've always repeat this. It is not about just a breakout, breakout of one structure or a trend line. It doesn't indicate that oh the trend is done. You need to combine at least several or few of point of views utilizing the technical analysis tools to really understand, to really get the feeling that yes, they are all of them confirming one thing, that the trend has been reversed. This is the most important thing because in the end, the trend is telling you which direction the market is going. This is not the market, again, this is index, but doesn't matter what you are analyzing. So this was the end of that. I know it was an ABC. I can go also makes it more fancy because I'm trying to um, just sharing knowledge. It is not about it is not going to help if you want to really trade on that or analyze it for some kind of trading purposes. You really don't want to count these waves, but I'm doing it because this is the educational content, not for trading. Uh, okay, what kind of ABC it can be? Uh, I can say it was A, B, C, something like that. And okay, what was this A? If it is the end, this is the bigger view of that ABC. What I'm feeling that it was as such. Uh, maybe I can jump into the hourly at the moment to see more details. Let's get rid of this MACD. And yeah, for this A here, I'm saying that the trend just started from here. This A is again one impulsive wave uh, in a lower scale. Uh, I can say that it was the first one. You can start it from this point or this point, doesn't matter. This is the first wave, this is the second, this is my third, this is the fourth wave, and this is the fifth. Let's just change its color. Now it is not intermediate anymore. This is the minor one. You can see that these smaller numbers 1 2 3 4 5 just created that A wave. I have some sort of side wave correction. So as it reached here, let's just change its colors. Okay, this is my B. This is a sideways correction. It is some sort of a flat. I will just say sideways correction, and it is flat. It is actually an irregular flat, but I will come back to that. Uh, let's just fix it a little bit more. About the fifth wave here, you can see the fifth wave is some sort of a diagonal. You can see this was force 1, 2, 3, 4, 5, and you can see that the fourth wave of this small one, it somehow entered the first wave, and you might argue that it is not, but this has been done. And this is not a regular wave. We call this diagonal when the impulsive wave. It is still an impulsive wave. Let's zoom a little bit from this fourth to this fifth one. This is still an impulsive wave, but it took it was not a sharp, really sharp. In comparison to the other ones, for example, the third wave here up here, this was more sharp. This is actually from the value perspective or price perspective, it is much shorter than the third one, but you can see it took much longer. This is the behavior of diagonal, that they are still impulsive waves, but they took longer, and they will enter the territory of the previous wave. So in a 1, 1, 2, 3, 4, 5, if we say, for example, it was a 1, 2, 3, 4, 5, this third wave here, the smaller scale again, you will see that this force, for example, did not enter the first territory when it was correcting. So this correction has a very huge gap between the destination of the first wave. But here it is not the case. Here it was the first wave. We had the correction almost to 78%, more than six or something around 61. But after the third wave, you can see it came back, and there is no gap. Also, this has been entered the territory of the first wave. So this is the behavior of diagonal. They are still impulsive waves, but they are not following the same rules. They took more longer. And if I go back to the higher scale, if I just go back to the daily view, I can see that it was 1, 2, 3, 4, and you can see this diagonal. This is called the ending diagonal. This whole bigger wave, it is 1, 2, 3, 4, and 1, 2, 3, 4, 5 as the fifth wave. You can exactly see these five diagonals, and this is usually happening when a trend is so aggressive. It is continuing. The fifth wave also continuing, and you can see very very complete five waves there. Anyhow, we this recognizing these kind of waves, which in the end help us to be more confident. So we already had fifth indication that it was the end of this whole story. It was the end of the correction, but also these details will give us a better confidence about what is happening here. Let me zoom out a little bit on into this corrected structure. As I said, it's a flat. We know that it was the final destination of the fifth wave, or our big A. Now this is our big B, the correction of that correction structure. But here we are not seeing a zigzag or something sharply going back. We are seeing some sort of a range market. And here it is one of the sideways structures that I actually wrote. And these sideways also take longer than zigzag, and they are not so sharp coming back. But you can see we had some sort of fake out. If I just show this top side of this red rectangle, if I just count it as a resistance zone, the price reacted to this. one step, two step, three times, and you can see it was some sort of a fake out and return back. Yes, you can call it a fake out, but it has other name uh, when you are actually looking at it with Elias theory, the waves Elias wave theory, and it is an actual irregular flat that it's actually didn't respect to the previous zones. It actually went more up, or in vice versa situation more down, and then return. So doesn't matter how you look at it. It can be an irregular flat, or it can be some sort of fake out and returns, because these fake outs, it is happening because of those um, facts, not facts, because it is theory, because of those perspectives in other theories like Elias wave theory. Anyhow, we are looking for, we can continue counting the waves here. Uh, this can be 1, 2, 3, 4, 5. You can see it as 1, 2. This is the 3, very short. We have a long, again, correction. You can put it maybe here, this force. Oops, that we can have this force. I'm more fan of this one. And the fifth, I will tell you the reason. Because when we have in one impulsive wave, I'm now saying that this was my first, this is the second, which is some sort of a side wave, again, like this rectangle, but just in a lower scale. This is the third, and I can see some sort of uh, actually zigzag here. And the rule is that when you have a side wave structure in the second wave, that first corrective structure, the second corrective structure, which is the fourth wave, it is going to be a sharp or zigzag correction, and it is vice versa. Also, we experienced that in the second wave of this bigger one. You can see we had the zigzag, but the fourth wave, uh, oh, this is also not a good example. I just messed everything up. But according to the rules, that was not a good example. But when you have a side wave structure at the second one, you're going to probably have a zigzag structure in your correction. So this is why I want to name this one as a fourth wave and the fifth wave here, which in the end created some sort of a triple or multiple um, bottoms. Also, and a fake out here. So when I want to look at this, I can also add another text. Let's correct this one, not this. And 50% also uh, coming up with a fake out. This fake out, it is not just you want to ignore them. Okay, it was not a breakout. I don't take care of that. The fake out is also telling something to you as a technical analyzer, that okay, it tried to break it down, but it was not successful. So it is a big indication. These fake outs. We had another one here top, is fake out. So okay, it is not going up. Sorry, I'm not going to buy. Or if I bought it, oh, it was not a successful trade or something like that. It is an indication. It is a very good, valuable thing that okay, it tried to break this out, this red rectangle. I'm actually talking here, but it was not successful. It is an indication of reversal. We are also seeing some sort of a breakout, and this is very important. If I zoom out, this was the very important zone, weekly very strong, and when it was not successful, after just reaching outside and immediately returning back, it is an indication of reversal. So we actually found, we already had fifth confirmation that this was a reversal. Now we got another one that counting waves also telling us yes, it is completed. And another one, the seventh um, indication is that it wasn't fake out. So we are after this fake out, we are expecting a reversal. So all of these things hand to hand, it just wants to tell us, let me just get rid of these things, because again, I don't want to mess my chart with a lot of things here. Let's also get rid of these waves as well. I really don't like them. Just wanted to get sure, just going into the details, what is happening here from the wave perspective. But in the end, what I want to know, if I go back to the daily chart, is that we had a very big weekly impulsive wave. Then we had a correction to this 50% support zone. We had this breakout, and we know that this is reversal. So this is so important for us. And let's continue. Let's just dig into that, because we know it was a reversal. Let's just move things a little bit. Let's zoom out a little bit more. Now I know that I've had a reversal here. Let's take a look at this trend line, because now we are moving into hourly chart. Maybe we can improve this. It is fair enough. The important thing here from the breakout perspective is that after this breakout, I'm really struggling to fix this to a more accurate point. Okay, finally I did it. Let's just clarify that it was the breakout. The important thing is that after this breakout, let's put it here up. After this breakout, we're seeing a retest the same structure. So the structure just broke, but immediately after that it retested and it uh, bounced up. This is another indication of that this was not a fake out. As you saw, the fake out, when it actually returned back, it didn't bounce down, it entered the previous zone. But here it is not the case. It is just reached that point, and instead of behaving as a fake out, it bounced up. So it is saying that it's not a fake out, it is actually a breakout. And we know it because we got 7 to 8 indication regarding that. It's nice information so far, but still, what is the conclusion? What is the situation of this index? Let's get rid of these trend lines as well. Have a more clean eye of this final impulsive wave. I can see it is reached to this resistance zone, and we are seeing some sort of reversal. Why? Because we had this higher high, again another higher high, but now we are getting a lower high. Or if I want to look at the same thing um, in another way, I had this lower. It was a higher low in comparison to the previous one. I got another higher low. Here is still a higher low, but now I'm getting a lower low. And if I want to count this as another higher low, maybe the highest low in comparison to this one, here I got the lower low. So both of these indicating that we have another reversal here in the hourly chart. Let's try to draw some sort of trend line. Uh, let's try to make it as valid as possible. Can I connect it to this one? Not bad. I can I I don't hate it. Uh, I can say that much. Yeah, I know that this shadow, it was, I can call it some sort of fake out, but I really like this because it is telling me that this support zone, let's just indicate, just clarify these points, that it was used to behave as some sort of break support, but it just with a very huge candle, hourly candle, here in our case 4 hour, it try to retest the structure, and it was not successful to pass again, to just jump back in like we had in here in this on this shadow. So here now the polarity principle just kicked in and said, no, I'm resistance. I'm not support anymore. I'm resistance. I will prevent you to actually increase. So this is these two things, these breakout and its retest. I can just call it out with the call out tool here. It was the breakout. Now this one, this time we're talking about this hourly structure, and here it was the retest of that. So it retested, and now it is, as we can see, it is creating lower lows and lower highs. Let me also take a look, just try to draw something like this. Not so fancy, but you can see that it is also creating some sort of a fall rising wedge. So this impulsive wave in the end, we know that this was the end of the very big corrective structure. We know that now after this we are going to have some sort of impulsive or something like that, and we started with one impulsive wave. I don't want to dig into the wave cantings anymore here, but I'm seeing enough uh, indications that okay, I have a rising wedge pattern. This rising wedge, as you can see, when you draw a thread line on top or left of that, top and bottom of that uh, channel or trend, so to say, you will see that these lines are going to be a little bit symmetric. So if I continue them, you will see they're going to break each other soonish. So this is what we call rising wedge, which is the indication of the weekend trend, because the lower part it is fast, but the highers are not that fast enough. That's why the angle is lower. That's why they are not parallel, and that's why they are going to break each other. They're symmetric. So this is the another indication. First breakout, retesting it. We had the rising wedge. The most important one on all these things happen on a very important support zone, weekly. You remember, let's get rid of this one here. If you go back to weekly, if I zoom out a little bit, if you remember, that was almost the first or second thing that I draw on the chart, this very important zone that we found on weekly. Now we know the value of looking at weeklies as well. Otherwise, we could miss this very important level. So I can also bring up MACD as well. You can see it was the higher high. We have the highest, but when we created when another higher high created, you're seeing a lower high. It's still the same here, but it is a little bit of a difference. Maybe we can see a better thing on daily. No, we have some sort of divergence, but not so accurate. That's why I don't want to mention that, but I have enough indication that it has been reversed. So what it is saying to us, in the end, what is the conclusion? The conclusion is that between these two support and resistance zones, they are really so strong. One impulsive wave just started because a big correction, it seems to be done with fifth indication. We found that already, or seventh indication. Now we have that impulsive, but now it is correcting itself. Let's get rid of all these things, these breakout, these callouts, these green and red stuffs here. Let's also get rid of that. I'm really fan of cleaning the chart. So this impulsive reached out to this level, and we know it is returning, and it is some sort of a correction. So we know that this impulsive, it should have a correction. Let's check it out, how much it has been corrected. Not that much, just 23%. So it is saying that we are still actually uh, going down. It was in the news that people are, it seems that they're buying because of the inflation in the United States, because the value of dollar is decreasing, as we at least seeing here. And let's get over this restriction, and we know that the we are not seeing any signal that this correction is done. But anyhow, we are going to have some sort of a correction here from this time. This is the final conclusion. That maybe here, because also it has, you can see, if I just zoom in a little bit, I don't want to go into 1 hour or 2 hour chart, but you can see that it is also a zone. Let's revert the color of these rectangle back to the original one. You can see that we have some sort of a double bottom here, and it might be the end of the correction, but we don't know really. It might break this and just continue more down. What we want, what we understood, that okay, what the impulse, a big impulsive wave just started, but at the moment, in a very short, not very, in a short range, we are going to have this correction, but in an intermediate uh, term, it is going to be an uptrend, because we're expecting that regardless of if it is going to be a 1, 2, 3, 4, 5 wave, or if maybe we were wrong, it is an ABC. In the end, we are expecting at least another uptrend here. So after this, we don't have any indication. We are not seeing any breakout on this straight line. We are not seeing, let's just let these arrows. I'm talking about this straight line here. We are not seeing any breakout. We are not seeing, yeah, a double top, but not a reverse, just the first candle. At the time I'm recording this or streaming this, we can see we had only one here. So after that, we are waiting for that these corrections just get ended, and then we are expecting, as I already draw, a higher. If I zoom out the daily chart, yeah, we are expecting that this zone again gets broken, and probably it is going. We don't know. Work again, working as a support, change its behavior and continue moving up if it is force where, if it is the actually, if it is going to be 1, 2, 3, 4, 5, we're probably going to see something like that, this level, because it is an important level, or even that level, which is the highest in the history. um, and yeah, this is the index of dollar. That's okay, it has some inflations, it has some drawbacks, just downtrend, but it seems that it is finding its way to be, again, be more powerful according to what we have analyzed, or I have analyzed here. And we are seeing some sort of in uptrend in a long term, but in short term it is going to be a range market or downtrend, actually, movement here. That was dollar. um, I guess it is enough to continue with the second one and last one. This is Dow Jones, the index of the United States uh, stock. Investors were too busy buying a dip on Friday, let inflation, blah, blah, blah. And the title is that it was for 4 weeks, it was red. Also, the picture is showing a very red downtrend arrow. Cool picture. Let's take a look at this index. DJI is the Dow Jones Industrial Index of United States. Let's go back to weekly. starting with clean chart as always, not zooming out a lot for weekly, just few last waves. I can see an uptrend and a downtrend here. So let's see until which level this has been done, because I can see after reaching out, it is just reversed. So it seems that we had some sort of impulsive wave and downtrend afterwards as the correction, and it has been corrected until 38 percentage, 38.2. And if I get rid of these Fibonacci levels, I can see a very important zone here. Price reacted to this point. It's very, very nice to see. Let's clarify it by indicating two red arrows here, because it was working as resistance. It's dropped again as a third time, but with a gap, finally it broke. When it retested, it just play a role as support. Again, polarity principle. It went off. When it reached that point again, it did the same thing. Again, it bounced, but when it reached out, it seems that we had some sort of a, again, fake out here. Same situation as we saw in dollar index. It was a end of correction. It seems to be. We will see if we can confirm when we actually dive into this in bit more in more details. End of correction on very important, or not important, maybe a strong is a better term, a strong support zone. Why weekly support zones are strong? Because it took a longer time to get created. That's why their validity is also much higher. That's the reason that these kind of support or resistance zone that we find on weekly charts are important, because they are so strong. They cannot be broken easily. This is, I think it is enough to take away from this chart, this weekly one. Let's look at the daily. I know that it was some sort of a corrective structure. The first thing actually I'm seeing here, that this end of what I'm actually assert here, the end of the correction, I can see that it is with a double bottom, with a fake out, but also a double bottom. I found another indication. Okay, Fibonacci level, very strong support zone, double bottom. Okay, let's uh, not get involved with the wave candling, because it's some sort of diagonal. They're actually interfering. It's not really that much valuable to go into those details. Let's try to, I can see I can draw a very nice straight line of this correction. And let's draw those red arrows again. Let's zoom in a little bit more. Add another one here. And I can see finally we had that breakout. So after that reverse, we are finding another one that in the daily structure, this daily trend line, it has been, it is broken now. We can, oops, wrong tool, sorry. Let's use this call out to call it out a breakout. And as you are seeing it again and again and again, this principle is very important. This is saying that it is not a fake out, and it is some sort of uh, a retest that successfully bounced up. So now this structure, it is still valid. This trend line, it doesn't, again, it doesn't mean that this trend line is not valid anymore. It is still valid, and it is playing a role of support from that time. And that's why this kind of retest just happened. Um, what I'm saying here as well, these retests, because we had some return, let's bring this breakout to the bottom. I would like to draw another resistance zone here because I'm seeing it and not ignore it. I can see how many times, not just the trend line, but also this resistance zone here. We had after breakout, we had double top, again a reversal bad pattern. We saw it in the double bottom. This pattern again reversal. It reversed, and now we're seeing double bottom, double top, and again the reverse. But then we are also seeing that it is still reacting to this level. Again, I can draw more arrows and more arrows here, just saying that it is a very strong and stable resistance zone. So after the end of this correction, I can still more um, I can convince you more that yeah, it seems that we have some sort of not very obvious but falling wedge. I really don't want to call it a falling wedge, but we had this end of correction on a very strong support zone, double bottom, reversal, breakout, and here retest. I forgot to call this as a retest, successful retest. Here we have, and now we can see that this retest, not only a retest of this structure, again, I can call this as a support zone now because I'm seeing that this is going to be continued. This is now prices ranging, just going up and down between these two channels. Here, I can draw another one as well. Here, let's zoom in to have a better view of that. So coming back to this big picture, that the Fibonacci level, the double bottom, the breakout, retest, still confirming the retest. It is not breaking down the support zone, the point that it has been breakout, and we are retesting it. Also, another thing, so we are sure that this correction is done, this big correction, but now we have started an impulsive wave, like exactly the same thing that we used to see on index, the dollar index. You're seeing the same thing here as well, and I can count the waves. It is one, two, something like that. I guess it is three, four, five. Why I'm calling it as such? These are not minor waves, or no, they are not because it is a daily chart. It doesn't really important, but I would like to call them intermediate waves. And it was, the fifth wave is not that much higher than the third wave because sometimes these fifth waves cannot reach out to cannot actually create a higher high uh, in comparison to the destination of the third wave, and it is something called truncation. This truncation might happen in the last waves of the whole impulsive wave here. So this is, I guess it is 1, 2, 3, 4, 5, and this is the last point of our correction. But I've actually messed a lot of things up here. I would like to keep that wave canting. I risk it of this breakout. We know that this was a successful breakout. We know that, okay, we had the trend line here also confirming it. Not really important, but it's still nice to have this. Also, if I continue stretching this out, I can throw another red arrow here as the final destination of 1. It reacted to this zone. 2, again 3. Here we have. So let's jump into the hourly finally. Zoom out a little bit to have a better understanding what is happening. We know that we had 1, 2, 3 after the big correction. We're going to move forward 1, 2, 3, 4, 5 with truncation. Let's call that out just to clarify that it was the truncation. indication on the last wave here. So we have some sort of a range market, and we know it is so common. What is it? We already have that. It is a sidewave correction. This whole big channel, this horizontal channel, it is a sideways correction, and we know that it is a flat. These flats usually are ABC. I can continue this with A, um, let's call this B and C. Let's get rid of this truncation. Also, I would like to get rid of these arrows. They are not going to help me anymore. I know how they important these zooms are. Just clean the things up a little bit. I know it's a sideways flat, so get rid of these as well. Okay, now I can breathe. Here I can see that this is our first wave. The flat waves, the minor counting is the structure. It is one. It is ABC, like a zigzag, normal ABC. But normal zigzag, it's 5 3 5. The A is 5, the B is 3, the C is 5. But when it comes to flat, when it's not zigzag, when it is not sharp, it is a side wave. It is playing around these, because we're talking about the correction of this last impulsive wave, right? So they are going to be 3 3 5, not 5 3 5. So the flats are 3 3 5. Um, I don't want to just jump into the 1 hour to see the details of those waves, because as you just go in the lower time frames, more emotions will come into the play, more more actually um, actions that are emotional will just come into the play, and it will really affect the waves. So I don't really want to count the waves lower than 4 hour, because also they are not going to be so valid, as I said, because the time frame is low. The creation, the time that it took to they get created, it was also lower or shorter. So they are not, they are the same, they are that much invalid as well. But as long as they are going to have a longer period to occur, to take place, to those patterns get created with those waves or support or resistance zones, anything, their validity will be much more. So here I have an ABC, and after the C, it seems that okay, these were not really very very sharp waves, but I can see a very sharp thing happening here. It seems that people just in the industries, I don't know, we are seeing some sort of improvement here. 3 or 4 big candles happen after reaching this point. So it might be some. So we know the conclusion of this is that if I can find an arrow, yes, the destination will be here. But it is important to know that we cannot say, okay, it was an ABC, the flat is done, and you need now, it will be a breakout, and we are going to have the next wave. But go back to the daily chart. Here I can see that we had this sort of the impulsive wave, now this correction as the uh, its correction, and now we are expecting the third wave to just taking place. Yes, in a long term, this is what I'm expecting actually, but you cannot guarantee that it is happening just now. I'm seeing some kind of indications that, yeah, after this ABC is done, a very, let's get rid of this big arrow that I just drew. Yeah, I can see that these are going to be increased a lot. But I would like to say that yes, the target will be, so we are going to have some sort of improvement on this index here. But the flats, it is so important. Flats can be a single. double or triple. What it means, I can use another tool here that it is counting. If I hover on that, also an information, Elliott double combo wave. So it is after that, this might be this whole ABC, it might be W. Then we can have an X as the link, and we can have another ABC here playing around as a double top. So sorry, double flat. So this flat, this whole ABC, it can be a W, one X to link it, and then Y. Also, it can be continued. It is not just this one, it can be continued. So it can be triple, the Elliott triple combo wave, WXYXZ. So it can be something like that. W, like before, X as the link, another ABC, now we call it Y this time, but also another X, another link, now the third one, triple. So it can be Z, the Z also coming to the place. So that's why I'm still telling you that in the short term, we cannot guarantee that it is going to be a breakout. Let's get it. I know it is a lot of theory here, but it is always good having this knowledge. It is going to prevent us to misjudge. Okay, the correction is done, let's just invest on that. It is going to move forward as fast as it can. We can see some sort of a start of it here. Yes, it might be done, but from this time we don't know if it continue moving up, or it can be a fake out returning, or like the other ones here, it might reach out to this point and return. That's why I said that this is very important. It's a very important zone here. So we don't know. As in a short term, conclusion is that in a short term, it is going to be an uptrend. We might see the continuation, but we also might see more range uh, on this index. Um, I'm done, but because it is index, I would like to introduce a new thing, because usually I prevent to do that. But because it is index, I really always try to run away from showing something that can be printed, that can be interpreted as signal. But because it is index, usually people cannot, or they don't want to invest on indexes. I can show you. Okay, if it break, we go for, we know that someday in the future, in the long term, we analyze that it is going to be an uptrend. It is going, this level is going to be broken. But when that happens, when is the target? I would like to talk about target. So let's get rid of these waves. They are not going to help me anymore for that. Again, just creating some room for breathing. And also, I'm not interested on that anymore. The more important things for me is this zone here. After the breakout, you one of the tools that you can use is the Fibonacci extension level. So it is the vice versa to extensions. Here in TradingView, the platform that I'm using, these both tools have been combined. So we are seeing the retracement. We can, but it is the reverse. This is not 78 percentage actually. It is the 23 percentage this level, but I draw it reverse to utilize the extension levels here. So if it is the first wave, according to the Elliott theory, the third wave is usually going to be up to 161. If it's the fifth wave, it can be 127 lengths of the first wave, or if you're calculating for the fifth wave, 127 of the third wave. So because we know that it was a correction, it just ended. Now we are going to expect that it is going to reach out to the level. And yeah, it is really very harsh, because we are telling that it is going to even increase more, because if you go to the whole history, you can see price never reach out to that level. We are almost on the top of the history in from 1990, something like that. So it is really a big assertion that's saying, okay, it is also going to break this top history level, but it was so close. It is that much. If it was an old one, I could say, because it took longer to be there, so it is more valid. But because it is so close, I can assert that it might happen. And I'm feeling, because another important thing when you want to say, okay, we had this correction again, what is the target of that? If I draw again, the first thing that I drove on this chart was this one. Remember that I said it's actually uh, finished its correction into these 38. Let's get rid of this one. You can see that how easily charts can get below with tools we are using. Let's get rid of this zone as well. You can remember that it was 38, um, and we, with several confirmation, we understood that now this correction is done. But just look at how short the correction was. When the correction was until 38 or 50, even 50, lower than 61.8, because this is a golden ratio. This is what usually should happen, right? But the correction was much shorter. It is indicating that this wave market really wants to move forward. The correction was not that much long. So maybe it took long time, but price didn't actually reversed lower than the 38 percentage. So it is the indication. So when I want to calculate what is the next level, so I can say that it is a powerful, it is much more powerful trend. Coming back to the uh, hourly chart, so when I want to say that it is going past that history, it is not that much often big assertion, because we know that top history in the whole history, it was so much, it's so close. Also, we can see that this big retracement, this correction was not that much big. So we are expecting a very much more powerful wave and to the top. So let me just very quickly just return to the, okay, this was my wave. Let's zoom in a little bit more. So I can say that it is going to be uh, 161 percentage, passing that top. Also, I can see some sort of a pattern. It is, let's get rid of this tool again. I can see it, we have a reversed head and shoulder. Just wants to illustrate how we actually trying to understand where is the target of the next wave. We know that is the third wave. It is much powerful usually. We have found that Fibonacci level. It is passing the history, but we are also seeing another pattern. It isn't head and shoulder, but we are seeing a reverse one. This is the left shoulder. This is the head. Yeah, it's a reverse guy. And this is the right shoulder. And when it comes to that, it is saying that if the neckline, which the neckline is actually that resistance zone, that very important resistance zone, when it is done, when it is broken, the price will move usually to the length of the head. So from the neckline to the head, it is going to be, this is the length. I usually use this curve. And if I say it is going to break here, it will be the target. And now if I again redraw, I know several times I draw it and remove it. This is not, this is even higher. So This is again telling me, and not third indication. The first indication is a third wave. Target is 161. The second indication was that the whole correction was so short, so it might be there. The third one is that the highest high that we have concern about, it is so close. It is not really historical. And now we are coming with the fourth indication about the target that, okay, this head and shoulder, the target is even much higher. So at least we can we can expect this. Just as the last conclusion, it can be expected that it moves after some time. We don't know if it is happening just exactly with this short wave here, but we are going to see a breakout. If I draw it, at least this is my opinion. It is not something guarantee. We don't have any kind of guarantee. We can see some sort of double top here, and I'm expecting that these level just get broken in a long term, not short term, long term. And I don't know, next year, this year, I don't know, but in a long term, we might see some sort of a breakout to this level. And in the short term, we know that it is going to be an increment, a bullish movement here up to this level. This is a short term. And in medium, it might be some sort of a play around this area, something like that, and going back and forth until it breaks this level. And after that, I'm sure we were going to have, not sure, but I guess what I'm seeing, that we are going to have fast movement at least to this level, and with some sort of a play regarding that after just retesting or something, because this is very important. We might have actually more movement. Uh, so you're almost seeing a five wave if it is the first of the third wave. One, two, three, four, five. I've also um, have having drawn something like this. It's just here until we reach out to that 160 Fibonacci extension level, or the target of the reverse head and shoulder. But we can talk about these things anytime this level just get broken and retested. We cannot talk about these until we see something like this, just a breakout to this level and a retest, confirm, get the confirmation that yeah, it's a broken, and now we can talk about these targets. But anyhow, this is how I usually try to utilize, again, not indicators, not anything, utilized by Fibonacci extensions with the target of the broken patterns like head and shoulder, by utilizing the previous structures and zones like this, and also by looking at the trends and how the bigger correction was, that it was not a very huge correction here. So it is promising that this index is going to be so positive in the future. I hope you enjoyed. I have a Discord channel. If you have any question regarding that, feel free to put comments if you are not watching it live. If you can put comments on YouTube, or you can send the message asking questions. If you have a specific question about the content, I would be happy to answer. I will answer you as soon as I get a chance. In my Discord, you can find the link to my Discord somewhere in the description in my channel, regardless if you are actually watching on YouTube or Twitch. Thank you very much. Hope to see you again.